So, Ross, what did you make of the Coca-Cola numbers? How are you feeling about the consumer and this type of product?
Well, I think, as a whole, Coke is a pretty good look at the entire global economy. So U.S. sales were pretty strong while the foreign sales were the weaker side of it. But from a revenue perspective, Coke is growing quite nicely, and their new products are hitting pretty well with their consumers, because consumers do want healthier choices. And, I do like Coca-Cola, but with all the sugar in it, I just can't drink it very often. So the Coke Zero is doing very well. And they've got a Coke energy drink coming out soon, which ironically Coke started as an energy drink. And so I think that's also going to do very well. But it's a solid staple with a nice dividend, and it has a little bit of an elevated valuation, but a very well-run company.
So you still think it's a decent investment, Ross? This kind of company, I mean, we're seeing it higher today by 2%. You mentioned the dividend and the global story.
Yeah, I like Staples. I don't like the Staples index because it has tobacco in it, and I don't consider tobacco a staple. It's sort of a murderous product. But when you look at that Staples like Walmart and Coca-Cola and Pepsi and such, I like this area of the market where the market is today, because when the economy slows like we're seeing and we have uncertainty, the staples actually shine. So we actually like to own these kind of investments to offset all of our technology and higher risk investments. And especially, if we continue to see slower economy, these are the stocks that will continue to hold up. We like dividend stocks as well, and that falls in this category.
Lee, what are your thoughts? How are you feeling about names like Coke and Pepsi? You like some of these staples, right?
Well, yeah, but I like them for different reasons. I don't really worry about what they sell. I think white refined sugar is also a troubling product. You're looking at the dividends. That's what the game is here right now. This idea that we want to own staples going into a recession or something like that. The cat's out of the bag. I mean, Coke's trading at a 30+ PE right now, but the dividend is 3%. So they know if they deliver that, you're going to get a lot of people who want to hold that. And with this huge bump that Coke, Pepsi, I mean, look at Procter & Gamble. These are the main components in the consumer staple ETF or XLP. So you have to think of it this way. You take Procter & Gamble, you take Coke, Pepsi, Walmart, that's almost 50% of that entire sector. So I think in terms of the sector, you can just own those 4 stocks and cover the basics. I think right now people are buying them for the dividend yield. Oddly enough, some of these dividends today are at historic lows just because the valuations are going up. What I would caution investors is that everybody already knows that staples will do well in a downturn, and we've seen this huge rush up to own them, and I would rather see these falter. And I think that when you get down into the depths of a correction, the mistake people make is not buying a super beat up Chipotle or a super beat up tech name or the super beat up S&P. They're going to go cling to these things because they want the yield and safety, and just like after '08, they don't perform on the back end when there's the rush up. So I think if you're a trader, you have to be cautious and not get stuck in the safe trade when times are bad. You want to go into the high beta trades when times are bad, and not a lot of people know that.
Ross, what are your thoughts?
Well, times aren't bad yet, and it reminds me of 15, 16, where it was a really kind of tough time for growth. It could be a similar time to what we see next year, and these stocks outperform. So maybe it's a little early to look at the beat up tech names because they're not beat up at this point. So I think everybody wants yield now, and if you look at the world, with negative yields and the U.S. going in that direction, if I can get 3% in a Coca-Cola, it seems like a good deal. It's irrelevant of PE ratios if you just look at yield and dividend growth. So we're big owners of dividend growth stocks right now. I think that's where you want to be in the market. We love our risk area of the portfolio, and the economy is still strong. But I think if things slow down, these staples will be a good place to hide, actually.